Well, through the end of 2018, we are recapping the year gone by through the sectors. So we've done quite a bit in terms of pharmaceuticals, power, etc. And today is the IT space. Reema joins in to tell us a look back on the IT space. Reema, over to you.
Well, IT has been one of the best performing sectors with an outperformance of 20%. And the key reason for the outperformance, one, they were boosted by the Trump tax reforms. Secondly, the INR depreciation related benefits. We saw the INR weaken by 10% from opening levels to lows. And then thirdly, on account of regular capital return to the investors. But where 2018 differed from expectations, the year started with the hope that all companies will show a meaningful improvement in growth rates. However, contrary to expectations, there was not a broad-based pickup in growth. Growth was led by TCS, while companies like Cognizant actually witnessed a slowdown in growth rates, which explains why TCS was actually one of the best performing stocks this year with a rally of close to about 40%, given the company is likely to see a maximum expected return in growth rates. So TCS, for instance, had about a 6.7% growth in FY18, which could improve to double-digit growths in FY19. If you pull up a similar chart for Infosys, there could be just about a 1% improvement in its growth rates this year, while for HCL Technology, the company could actually see slower organic growth on a year-on-year basis. HCL Technology, as you can see, that's also been an underperformer compared to large-cap names, and one of the reasons has been the strategic tilt towards products and platforms, which has not gone down well, with the analysts, with the company having spent more than about $3 billion so far in its acquisitions. The two trends which are mixed so far and on which we need some clarity in 2019, one, deal wins, and secondly, the BFSI space. Deal wins at record levels for companies like Infy as well as Tech Mahindra, but on the other hand, Accenture's new bookings order book growth was the slowest that we've seen in the last 7 quarters. Even in terms of BFSI, it was strong for TCS, Infy and Wipro, but for companies like Accenture and Cognizant, it was actually on the weaker side. Now, some positives, and across-the-board pickup in hiring as demand has improved and the utilizations are hovering near 3-year peaks. And digital contribution, too, has been steadily increasing and now is about 30% for most of the companies. Now, as we look ahead to 2019, some of the key questions: will demand accelerate or even stay steady? Deal momentum is strong, though the macro is a lot more volatile with trade concerns, Brexit. Accenture has warned of client budget growth moderating. Also in question is whether the companies can fulfill demand without impacting margins in the light of the talent shortage in the US and the constrained H-1B availability. And plus, rupee's already seen some appreciation. As JP Morgan puts it, 2019 revenue trends imply improved growth rates, which could be optimistic if the macro risks materialize. But if the major risks such as Brexit, trade war prove to be benign, IT services could outperform as the companies have gone through the pain of investing to win against secular themes. Back to you.
Reema, thanks very much for that. Let's take a quick break, but up next, we'll have Yogesh Mehta joining in with his F&O trade. Stay tuned.